So thank you, everyone. Hope you've enjoyed your lunch, and we'll start the next section of the program. So members and guests, thank you. Our keynote guest speaker today, Jake Klein, Chair and Founder of Evolution Mining, will have a conversation and a discussion with Peter Kerr. So I'd like to welcome and introduce Peter first. Peter is in his 24th year as a journalist with the publishing group that was once known as Fairfax, but is now part of Nine Entertainment Co. For the past 15 years, he's specialised in resources, mining and decarbonisation, and writes for the Australian Financial Review. So please join me in welcoming Peter to the stage.
Thank you.
So, when Jake Klein arrived in Australia from South Africa in 1991 with a commerce degree from the University of Cape Town, a career in gold mining wasn't part of the plan. He began in resource finance and corporate advisory at Macquarie Bank, and he now calls his first fortunate gold strike, joining the organisation just as it was emerging as one of Australia's great entrepreneurial success stories. China also wasn't on the radar, but the opportunity to be part of the country's extraordinary reform era proved irresistible. Jake co-founded Sino Gold and spent the next 15 years as its president and CEO, growing it into an ASX 100 company and the largest foreign participant in China's gold industry, before it was acquired by Eldorado Gold in 2009 for $2.2 billion. Soon after, he secured a small shell company with an undeveloped Queensland deposit. Within 2 years, through a bold transaction with Newcrest and Catalpa, Evolution Mining was created. Under Jake's leadership, Evolution became Australia's second largest ASX-listed gold miner, today worth more than $20 billion, and recognised globally as a low-cost, high-margin producer. Evolution now operates 6 gold and copper mines across Australia and Canada. As Mount Rawdon nears the end of its mining life, Jake is leading Evolution's collaboration with ICA partners and the Queensland Government to transform the site into a large-scale pumped hydro energy storage facility, a flagship example of mining areas being repurposed for Australia's energy future. Following a considered succession process, Jake transitioned to non-executive chair with Laurie Conway as Evolution's managing director and CEO. More recently, he became executive chair of Endura Mining, an unlisted company backed by Australian super Orion Resource Partners and Glencore. Despite the workload, Jake keeps moving, running, Pilates, and even returning to surfing after 40 years. He's also a strong advocate, as we know, for strategic bipartisan mining and energy policy to secure Australia's long-term competitiveness. Ladies and gentlemen, please welcome Jake Klein, Chair of Evolution Mining.
Third time here speaking at the Melbourne Mining Club. Let's hope it's third time lucky for you and for us.
A hat trick.
Yeah. I remember the last time you spoke here, it was October 2016, 9 years ago, and Jake was described as industry veteran in those days. So what are you now, like elder statesman or something like that these days?
Soon to be retired.
Yep.
I suspect is what a lot of people think.
Right. Okay, well, I'm not so sure. But in that speech, so I was sitting down here at one of these tables watching, and in those days it was more of a sort of speech affair here with slide prezzo. So Jake was over there at the lectern speaking, and he put up this slide which had the list of the top 10 gold miners of the day by market cap on the ASX. And Jake compared it to the previous time he'd spoken here in 2009. And I think the point you were trying to make that day, Jake, was that the only constant is change. M&A is constantly reshaping that list. So everyone loves a time capsule, right? So we thought we'd recreate it. Jake's team have kindly put some work in, and I think with the magic of technology, I'll wave my magic wand. You can see we've recreated it by adding in the 2025 list. And Jake, the thing that immediately stands out to me, Newcrest, gone, taken over by Newmont. Gold Road, gone, taken over by Gold Fields. Saracen, gone, taken over by Northern Star. Oceana Gold gave up on the ASX, went to Toronto. St Barbara blew themselves up with a bad deal. Resolute found some trouble in Mali, no longer in the top 10, still exist. So do you feel vindicated? Do you think your point was well made that day?
Well, the list has definitely changed. But I think that the companies that you see in the 2025 list are pretty good. The Australian sector's in good health. There have been some really good deals done, and new companies have emerged, which is great to see. Helped a little bit by a $6,000 gold price. But fundamentally, the industry is in good shape. I think the challenge, Peter, is can we maintain our discipline, or are we going to suffer the fate that Warren Buffett always kind of predicts in his famous quote that you will see who's swimming naked when the tide goes out? And there will be a time when the gold price isn't as good as it is today, and that will require these companies in that 2025 list to have demonstrated that they're not just there because of the gold price.
So opening the batting, Northern Star and Evolution, your company Evolution, I mean, that's a pretty good increase, 4 billion to 24 in 9 years. I mean, was that just part of the plan, or is that sort of beyond wildest dreams kind of territory?
It's probably better than we expected when we sat here around in 2011 and talked about taking really what were discarded assets from Newcrest and putting it together with some other unloved assets and creating Evolution. But we always had the view that if you could do deals that were counter-cyclical and contrarian, we could take advantage of the opportunity, and I think that's pretty much what's happened.
We often hear this conversation that M&A in mining is value destructive and it's a dirty word and you shouldn't do it. But I mean, both Northern Star and Evolution, both were created roughly around 2010. Neither found some amazing greenfield discovery to have that incredible growth. Both were put together by acquiring things. Yeah. Are we too dark on M&A?
I think good M&A works well, and our deals have largely been asset deals, not M&A at a corporate level. Yeah. So we've largely acquired assets from majors who may not have liked the asset or strategically not wanted to be in Australia anymore. And certainly the assets we've acquired have been great.
So why weren't you taken over? If it was good enough for Gold Road and even Newcrest to get taken over, why do you reckon no one came and knocked on the door for you? Or maybe they did knock and the deal wasn't good enough?
Well, I think I have some nostalgia, and probably a few people in this room do as well, that Newcrest is no longer an Australian company. And I think one of the challenges we face as a sector is Australia just an incubator for mining companies to grow to a certain point where they get taken over by a major, an offshore major? Or was there an opportunity for Newcrest to have potentially, combined with a Northern Star and an Evolution, or frankly have acquired the assets that Northern Star and Evolution acquired, because they were in the process at the time, or may have been in the process? So are we not setting our bar high enough in terms of the potential for an Australian gold company to really be a true global leader, rather than just kind of waiting to be acquired by a major?
I mean, it's barely 2 years, I think, roughly, since the Newcrest takeover was completed. And if you look at the market cap of Evolution and Northern Star, well, Evolution, that's sort of pretty close to what Newcrest was when it was taken over, and Northern Star are way beyond it. So it's sort of, this is big leagues now, isn't it?
Yeah, so the assets that we acquired could have made Newcrest a peer of Newmont.
Yeah. So when I suggested to Jake, why don't we dig up that old slide from 9 years ago, he had an even better idea. He said, let's expand on it. So we've actually got a second slide to put up where Jake was keen to put the mining industry in a broader context. And I know there's a lot of data points up here, but we'll talk you through it slowly, hopefully. And so the third row where you can see there's a comparison about BHP to whatever is the world's biggest company at the time. And there's nothing specific about BHP here other than the fact it is the world's biggest miner. There's no comment on BHP's strategy. But you can see, 2016, BHP was 6 times smaller than Apple at the time. Today, closer to 30 times smaller than the world's biggest company, Nvidia. Why did you want to draw that to the attention of these people, Jake?
So I think it's important to recognise that the resource industry on a relative basis has grown has shrunk. The other sectors, particularly the tech sector, have grown massively. You've got $68 trillion worth of market capitalization. That's just in the United States. And BHP stayed relatively the same size since 2009 when I first spoke here. So, I think it brings into question, how does BHP and other resource companies retain its relevance, given that a New York fund manager who's benchmarking against the Dow Jones S&P 500 index probably doesn't need to own any resources to meet or exceed the benchmark. So, I'd say 30 years ago when Exxon was only 1.5 times bigger in 2009, Exxon was only 1.5 times bigger than BHP. BHP would have got traction in New York and London and any other fund manager who needed exposure to the resource space and to BHP. So I think there's both an opportunity and a challenge in that. The challenge is, I suspect BHP's road trips to New York are less busy than they used to be. But the opportunity is really in Australia, where we have a $4 trillion superannuation industry. We have over $350 billion in passive funds, and in the fund management industry and the super industry, we really have knowledgeable experts who are really interested in the resource space. So, I think it's an opportunity for Australia to become the global epicenter of the capital markets for resources. That's the opportunity.
You've also had a really interesting idea in the fourth row up there. The audience might be able to see it. It says Zijin Mining market cap. So last time you spoke here, Zijin Mining, $10 billion US dollar market cap. Not really the sort of company that you would ever read about in the headlines here in the Australian press. Today, more than 100 billion US. Why do you think this audience should be conscious of Zijin and what they're doing?
So I want to go even back further in time to the early 90s when I started getting involved in China. Zijin was an old state-owned enterprise. It was a provincial state-owned enterprise with one modest mine. And China was setting out on this reform process. And 30 years later, Zijin is a peer of BHP. China owns, or Chinese companies own 60% of the copper in the Congo. They've built Simandou iron ore mine in Guinea. So I think we need to just look up and realize that not only have the global markets and scale of the markets changed, but China has methodically implemented a strategy, which I think they set out to do 30 years ago, of growing their own companies, growing the smelting capacity, but growing these companies. Zijin just listed its offshore gold assets in Hong Kong. The equity raise was 200 times oversubscribed. The price went up on debut 70%. And these assets, which are relatively, in jurisdictions which probably we wouldn't consider, are valued at $40 billion. So their access to capital is cheaper than ours. Their risk appetite is certainly higher. And they are on the march.
So that transaction you referenced earlier this year, Zijin, sort of broke itself in half, didn't it? So all the Chinese assets are held in one company, and the new Hong Kong listed one has the international assets, including one near Kalgoorlie, I think. Have you got any theory? Like, what's the actual play there? Why are they breaking these things in half?
I mean, I think they understand that access to capital in Hong Kong is cheap at the moment. Gold is hot, and putting their gold assets into an international vehicle in Hong Kong and raising a truckload of money is going to allow them to go and do more things.
Okay. And as a final aside, Jake pointed this out the other day when we were preparing this, but if the gap between BHP and Rio and the world's biggest companies has expanded, Jake pointed out that the gap between BHP and Rio and the biggest gold miner, Newmont, not as big as it used to be, is it? Like, Newmont's sort of gradually getting there and is sort of becoming a copper miner as much as a gold miner. Is that something you guys are thinking about too?
Yeah, well, I think there's a lot of media around companies' desire to get into copper. You hear about Rio and BHP and Glencore and everyone, this Tech Anglo deal happening because of people's desire to get into copper. So I think, Newmont as a company now that has kind of the same scale as BHP, maybe gold and copper goes together better than iron ore and copper.
Maybe. So you referenced long-term thinking and the way China has seemingly successfully had these really long-term strategies that are going well. You're not just a gold guy. You're a director of Lynas, the rare earths producer, for best part of 15 years, I think, including through that really interesting phase around 2011, 2012, where this little company at the time had a mine in WA and was trying to work out where they should refine it. You chose Malaysia. Can you take us inside the Lynas boardroom in 2011 and how did that happen?
I can, but again, I'd like to just take a step back because China to me has been on this very premeditated, clear strategy that's been multi-decade now. They realized that they were short of raw materials and they've set about going and accessing those raw materials. I think realizing that a country like Australia was not going to give them easy access to our best resources. FIRB was going to be difficult to get through, so they were going to go and try and own Africa, and they've largely done that. And I put that in the context that they've had a multi-decade strategy, and when I reflect on Australia's success over the last 30 years, it was largely founded on the back of some very bold reform in the 90s, which laid the groundwork for our economic success, which has been phenomenal. This country has got rich because of those reforms and because of China's growth and their appetite for iron ore and coal. And then I kind of reflect on some of the opportunities and particularly where we're at today. In the 90s, we were match fit. We had real competitive advantages. We were a premier place for the mining industry. And it kind of feels to me that we're a team that's now relying on luck rather than good strategy. And I think the Lynas example is really good. Because, Nick Curtis had this vision and understanding of the importance of rare earths. This was in 2004 when he got involved in Lynas. Lynas has the Mount Weld project, which is the world's richest rare earths deposit. He spent 6 years trying to convince Australian capital markets and government that rare earths are really important. Struggled to do that, certainly couldn't get government support during that time, and it just wasn't considered strategic. Malaysia, on the other hand, offered us a 10-year tax holiday. They offered us gas to the site and a lot of infrastructure benefits, which effectively resulted in the plant being built in Malaysia. The ore is mined at Mount Weld, and it pretty much went to Malaysia. Now they've built a cracking facility in Kalgoorlie. But I think it's a reflection of the need for long-term strategy and the fact that now critical minerals is on everyone's mind. It's in the newspapers all the time. But we actually had an opportunity to own the rare earths industry 15 years ago. All of that IP is now in Malaysia. Australia is now talking about needing to participate in the critical minerals, but we're part of the crowd now. We could have been a leader, and it's a huge missed opportunity, and it kind of comes back to this need for real strategic thinking, vision, and courageous strategy if we're going to be successful in the next 30 years as a country.
So, we have federal election cycles that are 3 years long. I mean, that's pretty hard, isn't it, to get that sort of consistency in that climate?
It's very hard. We seem to be an intra-election cycle economy at the moment. And if you think about the resource sector and the need to think and have a vision for the mine of the future in Australia, it's going to require multi-decade reform. It cannot be something that changes between each election cycle. We're going to fail if that's the case. I think doing the same thing that we did for the last 30 years and hoping that it's going to result in the same level of success over the next 30 years is a recipe for failure.
Interestingly enough, in the past few weeks, the Special Minister of State at federal level, Don Farrell from South Australia, he's asked a parliamentary inquiry to look into two things. One of them is, should we have more federal politicians? But the second one is, should we go from 3-year election cycles to 4-year cycles? Now, it'll take some time for that committee to report back, and no doubt there'll be 3 more committees. But sounds like that the second one of those may not be such a bad idea in your view. Is that a fair?
4 years may be a bit short.
A bit short, yeah. Okay, excellent. But so I wonder, on rare earths, to play devil's advocate, right? We've got now Scott Morrison and Anthony Albanese. Feels to me like they've been a little bit consistent on the support for critical minerals, at least.
Mm-hmm.
And we've seen Trump administration 1, Biden administration Trump 2, have all seemingly maintained the rage on critical minerals. Is that fair? Like, are we starting to, do you see the West is starting to get this longer term bipartisan mindset on that kind of stuff?
I think it's become a good political soundbite.
Right.
But the actual practical reality of building a rare earths industry is much more complicated than a headline and a grant to a company or something. I think you've got to think about the knowledge and the IP, the training, the development. It still irks me that this is a country that has built itself off resources, and yet today there are fewer places that are training people for university positions for the mining industry than there was a decade ago. There are faculties at universities that are mining related that are closing. So if you want to be a leader in the rare earth space and critical mineral space, you need to be investing in the technology, you need to be investing in the education, as well as supporting the industry and laying the framework that allows them to be successful.
Is there a role for mining companies to do that as well as government, do you think?
There is, but it needs to be a public-private partnership with a clear vision and strategy. I mean, I think at the moment there is too much defaulting back to companies. What you need is, in my opinion, and it goes to energy, it goes to education, training, AI, the fiscal framework. It needs a national cohesiveness. It needs something which we're lacking at the moment, which is bipartisan support for something that is in the national interest and is going to be over multi-election cycles.
So you mentioned the E word, energy. Evolution has a energy project at Mount Rawdon.
Yeah.
So it's pumped hydro. So if you're not familiar with pumped hydro, this is the idea. You can make clean energy by dropping water through a turbine. And the word pumped is a reference to the fact that when power's cheap, so about now at midday where there's lots of solar, you pump the water uphill, and then you wait till dinner time when power's expensive, you drop it down through your turbine, you sell it at a higher price.
Mm-hmm.
Is that about right?
Well said.
What's Evolution doing involved in this? You're a gold miner, aren't you?
So we were approached about 7 years ago by ICA partners who said that they've done a survey of all sites in Australia and they think Mount Rawdon is best suited to pumped hydro. This wasn't only mining sites, but it was because of the topography and the head height, which is really important because you've got to drop the water through the turbines and create power. It's only 26 kilometres from the grid, and it's an old mine site nearing the end of its life. So it is definitely, after 7 years of work and probably $50 million has been spent by both the Queensland government and ICA and ourselves, it's definitely the most advanced deliverable pumped hydro project in Australia. And it is a key part of delivering the renewable pathway that the Queensland government is talking about. But it's, to me, the mining industry could benefit so much from this mine that's been going for 25 years. It's had incredible community and traditional owner support. To be converted into a pumped hydro renewable energy asset that could last multi-generations. I mean, the CEO of the Queensland government-owned corporation that did a presentation to the community got a standing ovation when he talked about the pumped hydro project. So I think it has so many great features to it, in addition to the fact that it will contribute to the renewable energy pathway. But it's kind of one of those things that as I've learnt about the renewable pathway or the energy situation in Australia, it just leads me to believe that, again, it's one of those things which requires a national strategy, a bipartisan national strategy, because just on a micro level, the Labor government in Queensland the previous Labor government in Queensland wanted to own all its generation capacity, so we are working on that basis with them. The new Liberal government set out a new energy pathway that says that they don't believe that the state should own all its generation capacity, so now there's another review of the process, and they want private capital too. But fundamentally, that if you just accept and you put aside Mount Rawdon for a minute, and you accept that at this point in time, Australia is short of energy, and you don't include the AI draw on energy, which seems to be coming fast, then something needs to be done that delivers cheap, preferably green energy to customers soon. And again, just going back to Mount Rawdon, we've been working on it for 7 years already. It will probably take at least another 8 years to generate its first power. So you're talking about a 15-year process. So targets where we're talking about 2030, 2035, 2050 had better be started now, and I just don't see any of that roadmap being mapped out. I see it being a political football that one side says we're going to go this way and the other side says we should go the other way. But it is in our national interest. If you think about the future of the resource sector, it is so dependent on reliable and cheap power. And talking about Linus, they just put out an announcement a few days ago saying that the reliability of their power to their plant, of their $500 million investment in Kalgoorlie, that was a replacement plant or part of the plant that they'd built in Malaysia, had to suffer from power interruptions. That's not good enough.
No. And so, you guys mine gold not far from Kalgoorlie. Are you being hit by the same blackouts, or have you got a different solution?
So again, it goes to the rare earths industry and critical materials. They require much more reliable, predictable power. The gold plant can deal with unpredictability better.
Right.
We haven't had any serious interruptions.
Okay. Your comments about Mount Rawdon are interesting, right? Because if you think about, we've all heard many times that permitting processes are slow in Australia, but if you think about what Mount Rawdon is, it's a mine, it's a hole in the ground, it's an industrialised site. This isn't like you're proposing to build something in a rainforest or something. So average person would assume that this should be relatively easy to permit. Like, it's all engineered already, it's all there. You have a relatively wealthy company there wanting to invest in it. Is it the changes of government that are holding this up, or do you think even if you had consistent government, it would still be slow?
Just to be clear, Evolution does not intend to own part of the pumped hydro project. We've funded it to a certain point, and then we believe it should be funded by other sources, either government or a private source who want to own generation capacity. It's probably a $7 to $8 billion project. And to put it in context, if Australia wants to go on this transition to renewable energy, which everyone says it does, it's about a $400 to $500 billion investment. So $8 billion, these things are very large, chunky checks that need to be written and investments made. But it's in spite of the fact that it is a disturbed mine site and has all the attributes that are necessary and appropriate and ticked off, it is a huge advantage that it is disturbed. The legislation isn't that easy to convert a mining license into renewable assets. The government that's not the issue. The government is being very supportive on that part. It's really just getting the momentum and the traction and the clarity from governments, and then the funding from somewhere. Because either if you're going to fund it from private sources, you're going to need a higher offtake contracts, higher energy prices you should take as a read-through, or you're going to need government to fund it. Again, these are national assets. They're electricity and power, as I see it, is a government responsibility largely. So it does disturb me to hear about mining companies starting to talk about building their own power generation, because that doesn't seem like an efficient national outcome.
smelters, you guys mine not far from Mount Isa, where the Mount Isa copper smelter has been among those seeking government support to stay open, and many of them we've heard about, Neales in Hobart and Port Pirie, and the aluminium smelters too. Are you comfortable with taxpayer dollars going to keep open these sorts of smelters?
I think the taxpayer dollars that is going into the smelters at the moment is just keeping the smelters in the ICU unit. They're not doing anything to improve the situation. So just as we've seen multiple times, Glencore's view of Mount Isa is that it's not a commercially viable smelter without government funding. So every 5 years you seem to have this dance between state and company, and a subsidy gets given. But it's not changing the fundamental situation, which is that China has built massive amounts of smelting capacity. And I think, again, we've got to think about is it a competitive thing? Is it something that we can change? Can Mount Isa somehow be converted into something that is technologically more advanced? There's always this rehab liability that hangs over Mount Isa. Is there something that the government could do to get that invested in a revitalized smelter? But I think just kind of doing a smelter subsidy defers the problem, it doesn't solve it.
Very good. You mentioned AI before and how that might be another leg of new demand for energy that's coming. Earlier this week we saw a national plan for, I think it was yesterday in fact, national plan for AI released by the government. I'll forgive you if you haven't read it. But tech is something that you've spoken about publicly in the past. You feel like we need to be leaning more into this, don't we? And did you see anything this week that did give you confidence about AI and our embrace of it?
I only read articles about it, and I mean, AI is something that I think we should really be paying attention to, because if you think about repositioning the mining industry, it doesn't seem like we're going to get low power costs prices soon. Our labour cost is expensive, so I don't think we should expect people to take a wage cut. We need to make ourselves more productive and more efficient. And if you imagine a mine of the future, something that could put us into a different league and make ourselves more competitive is the embracing AI and really using it in a different way to the mining industry as used to date.
So very shortly you're going to get an opportunity to ask Jake a question if you want. That's when you'll get the real good questions. Not these half volleys you've been getting here. But so please think about it and be ready to put your hand up. But perhaps a final one from me, Jake. You've been here 3 times. It was 9 years since your last speech, so let's assume your next speech here is going to be 2035. Think about that. President Eric Trump will be just into his first term, and maybe Melbourne Mining Club President Sally Cox will be barely halfway through her 30-year term running the club. What's the gold price going to be when you stand up here again in 2035?
Peter, you can never ask a gold miner whether the gold price is going to go up, because of course we're going to say it is. So yes, it's going to go up, standard answer. Mm-hmm. But I will say that any gold company that relies on the gold price going up will not be on that list if we put up a 2035 list of the top 10 gold mining companies in 2035.
Yeah, right. What do they need to focus on instead?
They need to get themselves more efficient. They need to take this time of a high gold price to really focus on and reflect on how you can become operationally excellent. I mean, Laurie Conway and the team at this table, we've built a great platform at Evolution, but there's plenty of things that we could have done better under my leadership. There's plenty of mistakes we made, and Laurie and the team are now committed to taking us to the next level. And I think that will determine, it's going to have to be on operational excellence. It's going to have to be on working as if the gold price is much lower than it currently is, and making sure we bank every dollar and really are disciplined, because these are times when the gold industry has lost its way.
Nicely said. Right, here comes Sally.
Thank you, everyone. Join me in thanking Peter and Jake. Thank you. We might take some questions from the floor now, briefly. So if you're asking a question, wait for a microphone. Rowan and Richard are out there somewhere. Stand where so we can see you, and please state your name and your affiliation. And we've got one over here with Richard to start.
Peter Arden from Bold Gold. Congratulations on building such a magnificent company. I can remember when you were forming Evolution, and you were very careful not to let the name get out ahead of time, and everyone was guessing, what it would be and what it would look like, and it's come a really long way and done very well. I wondered if I could just ask you a two-part question with a Canadian twist to it. First of all, we were very lucky here a few years ago to have a lovely address by Tony McCutch, who was President and CEO of Kirkland Lake Gold. And he said, amongst other things, that Australia and Canada share a lot of things in common. One of them obviously is very big in mining, but he said the one thing that, and he got a good reaction to it, he said the only thing is, Australians speak with a funny twang, which people thought was amusing. You and other companies like yours have gone to Canada and bought assets, and you were talking about acquisitions with Peter earlier. Not just in gold, in iron ore. I remember North trying to buy the Canadian Iron Ore Company, and it hasn't always worked terribly well. St Barb's, Northern Star. So is there something about buying Canadian assets and getting them to get with the program quickly that you've encountered or you can put your finger on? And secondly, in terms of acquisitions, can you say, I guess, without giving too much away, why you didn't buy what I think is one of the great recent gold discoveries in Hemi, which I think will be 20 to 30 million ounces before it gets much older, why that didn't attract your attention?
I think it's fair to say that Canada has been a challenge for us. I think Laurie was just there last week, and we're getting better at the asset and the operation at Red Lake, but certainly we were probably overly confident at the time that we could reform the assets and introduce kind of what we describe as Australian practice sooner than we could. Canada is a good place to mine. There are good people there, but we probably didn't understand that there are some cultural differences. They do have a twang, or someone has a twang. You probably need to take more time to just bed down the cultural differences and get everyone on the same page. Notwithstanding the fact that we don't often reference it, but for 18 months we couldn't visit the acquisition that we'd made because of COVID. But no excuses. It's been a challenging asset for us, and I was probably overly optimistic as to how quickly we could change it. I think your second question was on Hemis. I think Northern Star decided to acquire it. We'd been watching it, but Northern Star just thought that it was good for them to buy it.
Thank you. I think we've got one of the students with Rowan. Thank you.
Good afternoon, Jake. My name is Anthony Dale. I'm a geology student at the Federation University of Ballarat. Recently, my course actually closed after about 150 years. And the reason being for its closure was low enrolment rates among students. Given that we're in the state of Victoria and mining is maybe seen as unfavourable for students, how do you enact cultural change to ensure that more students are motivated to get into mining? Does that come from industry, or it's government and industry?
That's a really good question, and congratulations for joining the industry. You've joined the greatest industry on earth. But yeah, I think we do have to do a better job as an industry in motivating young people to join the sector. There is no reason why the youngest and brightest aren't thinking about the mining industry as a great place to build a career. I don't think we do a good enough job. I think the narrative is sometimes lost, and certainly in urban centres, it's a bit tainted by some of the environmental issues, particularly related to coal. But I think we need to do a better job in telling people that building software for mining companies could be more lucrative than building delivery apps for pizzas.
And we've got one with Richard. Thank you.
Thank you very much. Stephen Grocott, independent consultant to our great industry, I agree. I may be the only person in the room who's worked at a senior level for three of the big companies you mentioned, BHP, Rio Tinto and Newmont. But my question is prompted by something I read in The Economist recently, and that is that China is successful because it's run by engineers working in an autocracy, and the West is unsuccessful because it's run by lawyers working in a democracy. I'd be interested in your comments on that.
Well, that's a difficult question because you're talking to an accountant running a mining company. That's a difficult one. I mean, I think China's ability to act and think strategically has delivered it results which are very difficult to deliver in a democratic electoral cycle. That, I think, and I'm not advocating that we all move to China because it's not easy to live in a country that doesn't have elections or a free press. But fundamentally, I think it's incumbent on our leaders to start to think more strategically and convince the nation in a democracy that we need to commit to long-term strategic national initiatives because the landscape has changed over the last 30 years, but we just kind of feel, I feel that we've been looking down a lot and living off our success, and we haven't been looking up enough to see that the world has changed and that those reforms and pioneering work that was done in the 90s to set up our success really need to almost be revisited and rethought through as to what will set Australia up for success over the next 30 years. Because again, at the risk of repeating myself, if we do the same in the last 30 that we've done in the last 30 years, it will not be as good as it was for the last 30 years.
Thanks. Rowan, with you?
Hello, Paul Dixon, Chairman of Axel Re, and a very happy Evolution shareholder, I might add. Have you ever considered allowing shareholders the option to receive their dividends in physical gold? It has been done before in Australia.
No, it's not something we've considered. The line would be too large outside our offices.
And I think we've got one last question.
Thanks. Mike Nossel, a non-executive director these days. Thanks, Jake, and congratulations on your hat-trick. Peter, you might want to comment on this as well, but Jake, your first big success was in offshore investment from Australia, run out of Australia, and you mentioned the valuations of Zijin Gold on Hong Kong. You also showed us that we've got Ramelius, Genesis, Perseus and Ramelius, and yet Perseus's by cash flow, any of the metrics would be multiples, if not significantly higher than those other two. How do you think we are at assessing and pricing offshore risk, and do you think it's important?
I mean, I don't want to comment specifically on Perseus, but I would say that I think the landscape has changed. So, and if I go to Randgold, that then merged with Barrick, because when I was talking in 2016, I kind of highlighted Randgold and Agnico as kind of two of the best companies that Australian companies should try and aspire to. And Randgold's strategy was to pioneer Africa and Mali, and they took a footprint in a fabulously well-endowed area that's turned into a world-class mine. But the jurisdiction isn't world-class, and it is high risk. And I do think what you've seen over that time is that African countries didn't really have the option of going to capital markets or capital providers other than Western capital providers. And now they have the option of going to Chinese capital providers who are more comfortable with country risk. So I think Perseus has done a great job, but the reality is if you're a company, an Australian company operating in Africa now, you're likely to bump into Chinese competition that has cheaper access to capital, a higher risk tolerance and a real growth appetite. And so it does put you at potentially a disadvantage strategically than if you're in a jurisdiction without that competition.
Thank you. Can I ask Mark Flanagan from AMC to deliver the vote of thanks now?
Thank you, Sally. Good afternoon, everyone. It's my pleasure to give the vote of thanks to Jake for participating in today's discussion. Jake highlighted, since his last visit to the club in 2016, the changing of the guard of the gold sector in Australia. Evolution Mining is one of the few mainstays during this period, remaining in the top 2 leading companies, expanding the portfolio and market cap value almost 6-fold to more than $20 billion today. A testament to Jake's focus on the bottom line, seeking competitive advantage to drive long-term value creation. Jake provided us his view on the challenges facing Australia today and the short-term mindset driving decision-making. He highlighted the need for change with a committed and aligned strategy, safeguarding Australia's position as the centre of mining innovation and grasping the opportunity to be the hub of global mining capital. I'd also like to acknowledge Peter's excellent facilitation of the discussion, providing an interesting platform for all of us to hear about these important topics. So thanks, Peter. Jake, on behalf of the Melbourne Mining Club and everybody here, we wish you and your future endeavours every success. Please join me in extending a very warm thank you to Jake for his engaging conversation.
Thanks, though.
Thank you, Jake.
And Pete, we haven't forgotten you as well. Thank you. Thank you so much, Jake and Peter. You might want to return to your seats when you're ready. I have a few things to cover off, as it is our last lunch.